Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Eric Jorn, a partner here at the firm. Eric, how does it feel to be wrapping up tax season?
Oh, it's always good to be over the hump and you know, we're in the point where we're just putting the button on things.
Well, and it's got to be nice too, because it's not like, again, you guys don't do it all in 1 or 2 months.
Yeah.
It's spread out over the year.
Well, the IRS was nice enough to only give us about a month to really file people's tax returns, right? Because they're getting their brokerage statements by the end of February. Mm-hmm. So really you get March and the second half of it, or the first half of April to file all individual tax returns. And that's a large reason why we've changed our business model to focus on what really matters.
And so right about now is when people are getting their taxes back, and some of them are a little bit surprised.
Yeah. Yeah. So our goal obviously is that all of our clients walk away with tax season really just being an event, right? Or a formality. Hey, we got to sign some paperwork. We were right on plan. We're good to go. What we hear from the marketplace, right? And we go, fortunately, or unfortunately, conference season for us really is in the middle of
kind
tax.
Of falls in there. Yeah.
It's right during tax season, but it's good because we're talking to business owners who are really dealing with consequences of not planning for taxes. And we hear probably on a regular basis that I'm upset with my accounting service because I got hit with a surprise tax bill once again, or, oh, I'm always on extension and we're always scrambling at the last minute.
Why is that? Why do you think there's got to be like a reason this keeps happening?
Well, we talked about this before on a prior podcast, but small business owner, the world of accounting and tax for small business owners for a very long time was, hey, I'm going to grab all my stuff at the end of the year, drop it at the accountant's office. They're going to go through, do all the bookkeeping, and this is probably January or February. They're going to do all the bookkeeping for the year, file my corporate taxes, and file my personal tax return, all in maybe a 2-month span. Mm-hmm. It's really hard to, how do you know what you're going to owe for taxes unless you're bringing it? I mean, if you're bringing it at the end of the year, how are you ever going to know what you're going to owe for taxes? Unless you're like, well, my bank account, I should be good here.
I mean, you're guesstimating.
At best. Oh, at best, you're guesstimating, and that's assuming that you know all the rules, all the benefits, all the credits, everything that goes into to running a small business.
Okay. So, are there any signs as to why or how people would know if they're going to be overpaying on taxes? Anything they should see coming?
Well, I mean, again, if you're in a position of reactiveness, right? Hey, I'm only bringing my stuff in after the fact, after the year's over. We're not doing any proactive planning with your CPA. I don't have monthly financial statements, so I can't keep up with where my profit sits throughout the year. They don't know what type of vehicles I'm buying, what type of equipment I'm buying, how to maximize that if I'm remodeling my business. How do I properly structure that so I maximize tax benefits? I mean, it's really, you're in no man's land, right? If you're waiting until the end of the year to do your tax return, unless your business does exactly the same thing every single year.
Yeah, unless it's like clockwork and you have X amount of clients every year. That ain't changing.
Correct.
So realistically, if you're kind of in the dark, there's a really good chance you're overpaying on taxes. And we're not talking, that doesn't mean you're not making a profit, right? You could still be in the green, but by just not knowing what's happening, there's a good chance you're overpaying in some area.
Yeah. You know, ask yourself, when's the last time I had a strategy session with my tax advisor around, is my entity structure correct? Is my compensation structure correct? Do I have a retirement plan in place? Do we have the right type of retirement plan for my business? Does it allow me the flexibility to make some investments for our retirement while also benefiting the business? Do we have the right benefits package in place? Are we looking at properly upgrading our business and handling those upgrades? All those different things kind of fall into just our normal realm of tax planning, let alone all the kind of fringe items that you can also expand to. And then, hey, I have a situation that here's probably the worst option is I have a major situation that happens, right? I acquire real estate, I sell my business, I'm buying a business. And if I'm talking to my tax advisor after the fact, you're walking away from a monster opportunity to make sure that's set up for success.
Well, to me, it kind of falls into a category where, like, hey, I need a new lift, right? That's not a cheap purchase, right? So it's the difference of being reactive. Oh, I need to get a new lift just because I need it right now, as opposed to planning. Oh, I need to replace this.
Yeah.
Oh, when should I be buying this?
Yeah, it doesn't make sense to do it this year. Wait till next year. I mean, I'll be honest. 40% of good tax planning is just having really good books, right? Good bookkeeping. Because what could happen on one end, you could have a business that is buying a new lift, and they buy it through Napa, and maybe Napa is also their parts distributor. Mm-hmm. So we might be just expensing those monthly payments as they come through. Whereas if you're doing proper bookkeeping, proper accounting, hey, we have our $15,000 investment for that lift. Well, that's a fixed asset. Doesn't matter when I pay for it. It matters when it was installed and placed into service. And we could take Section 179 on the whole $15,000 versus the $1,500 in monthly payments that we've made throughout the year. Mm-hmm. Right? That's a big, I think that's a 10x difference in deductible expenses that I can take in 1 year. I think I might want to focus on having really good bookkeeping, right? And let me ask you this: is the formula of I'm going to bring all my stuff in at the end of the year, we're going to rush it through and prep my corporate and my personal taxes in a 2-month span? Sound like you're going to get really good bookkeeping done, or are you going to? You really think they're going to stop and ask questions saying, why am I paying this $250 a month to Napa when I pay all the rest of my bills are all over the place? Mm-hmm. You really think they have time to look at every individual invoice and make sure that, hey, I didn't buy some equipment, or have a communication string where they talk to you throughout the year and say, hey, what actually did you buy? Mm-hmm. What big items did we buy? I think it's really hard to accomplish that in that tiny little vacuum.
So really, how do people know? I mean, in the end, like, hey, I'm submitting my taxes to you right now. How do I pretty much get that vibe? Like, oh man, I am going to be overpaying.
Well, when they might move away from their eye contact, they might not want to. There might be a lack of responsiveness. Sometimes could be a lack of wanting to give you some bad news. Maybe even sometimes, hey, we got to put you on extension because I'm a little nervous about your tax situation. All those things could come up.
And those are all really a sign that something bad's happening.
Probably.
Okay. And real quick, I just want to know, in our situation, running with the monthly accounting,
yep,
how often do we run into that?
Very infrequently, unless there's stuff that either you don't communicate, you don't bring to us, right? And that's why we have those strategy sessions, right? It's an opportunity for us to both get on the stage and say, here's some things I got going on with my business. Oh, hey, we need the loan document because you bought that. Or, hey, we need that purchase agreement because you're acquiring that business. Or, hey, we need to be involved in the structuring of that acquisition. Or, oh, we bought some real estate. Let's do a cost segregation study. There's all these things that can happen. But if you're not inside of that rhythm, mm-hmm. It's really hard to go through and execute it. And at the end of the day, one thing that we do is in the fall, right towards the end of the year, we're giving you a final tax projection. Mm-hmm. And you as a business owner, right, you kind of have an idea of how your year went. And if we said, hey, we did the accounting all year round, and here's where we think you live, where you're at from a tax standpoint, you're like, hey, I can't imagine that. I bought all this stuff. And you're like, well, what do you mean you bought that stuff? Where is the purchase documents, right? All these actions, spur that conversation, which spurs that activity for us to make sure we're doing really accurate accounting, which then allows us to have a really accurate plan for taxes. So then when it comes to tax season, guess what? Hey, client, we're right on plan. We're filing the tax return. We got your quarterly estimated payment set up for the next year. This is how we based it. This is what we based it on. And we're going to meet again in a few months just to make sure we're still on track for that plan. And if we're not, we'll make adjustments from there. That Perfect. Sounds like a better roadmap than the alternative.
Perfect. Anything else you want to add to this, Eric?
I think that's it.
All right. Thank you.
Thank you.